Today we're going to talk about TLT ETF and what a dog this investment really is. First, we're going to look at your true investment yield on TLT. We're going to strip out the taxes that you pay and inflation. The yield is negative. Then we're going to take a look at the potential for gains or losses on the share price going forward. The dividend yield on TLT is 3.66. But to calculate your true after-tax and inflation yield, you need to adjust for taxes and inflation. So let's assume that the standard investor pays 30 cents on the dollar in taxes. Therefore, you multiply the 3.66 dividend yield by 70%. That's the amount that you get to keep after you pay taxes, and your after-tax yield is only 2.56 on TLT. Then you subtract inflation. Core inflation is currently 3.17, so what you're left with after you pay taxes and account for inflation is a negative yield on TLT of 0.61. That means you're losing money on the yield. So now we know that TLT is a loser when it comes to what you keep after taxes and inflation. It's a negative yield. And you can play with the tax rate in my little example table. You could take the taxes down to say 25%. It doesn't move the needle. You're still at a negative yield position. And if the Fed were to get inflation down to their 2% target, you may have a small yield, positive yield on TLT, maybe 30, maybe 40 basis points. I don't think it's worth it in my opinion. It's too small of a yield for risk that you're taking with an investment that has no inflation protection. Think about that for a minute. Unlike a stock dividend that can go up over time as the company's earnings grow and they raise the dividend, there is no dividend increase on TLT. There's no inflation protection here. So if we get continued inflation at any point in the future, you could have real problems. Now let's take a look at the share price and the potential for gains and losses on the TLT share price going forward. The TLT share price is going to move up and down over time based upon interest rate movements. We're looking at the last 20 plus years of TLT share price history, and you can see that for over 20 years, you're pretty much at a standstill. It's in the 90s for much of that time, and the 48% plus drop from here to here was due only to rising interest rates. Now the question becomes, what will interest rates do in the future? Because the share price is going to go up or down based upon future interest rate movements. The duration on TLT is nearly 17. So what that means is that for every 1% movement in the 20-year treasury, up or down, for every 100 basis points of interest rate decrease or increase, TLT will move about 17% up or down, and it's going to be an inverse movement. So if interest rates were to go down 1% for the 20-year treasury, then TLT would go up 17% and vice versa. Now, I think a lot of people are expecting interest rates to go down because we're hearing about the Fed is going to cut interest rates in September. Of course, we've been hearing they were going to cut rates for a long time. Remember, the Fed was near certain to cut rates back in March, and then it didn't happen. So let's assume they do cut rates. Let's take a look at what could happen if the Fed cuts rates. What could happen with TLT? This chart shows us the interest rate over the last 3 decades for the 20-year treasury. That's the blue line. The 20-year treasury is the interest rate that directly influences the TLT share price. I've also included on this chart the federal funds rate. That's the orange line. This is the interest rate that the Fed directly controls, the one that they raise or lower. And I want to draw your attention to the 2001 recession. Take a look at what happened. Here is the recession hitting, that's the gray band, and the Fed is quickly dropping the Fed funds rate. But look at what happened with the 20-year treasury rate. It came down just a little bit. And then again in 2008, here's the 2008 recession. You can see that the Fed starts lowering interest rates just before the recession hits, and they lower rates all the way down to 0. The 20-year treasury initially had a small drop and then a little bit of a spike, and then it popped back. See what happened right here. So if you hold TLT right now and you're betting that interest rates are going to come down significantly, and raise the share price of TLT, you may be disappointed. You might not get the big pop that you're looking for. It's very likely that we may see a recession here in the not too distant future, but will the 20-year treasury come down in yield? We don't know that. 20-year treasury right now is at 4.19%. That's still below the long-term average of 4.36. And nobody knows if the long-term interest rate is going to go down by very much if the Fed cuts the short-term interest rate. So let's sum it all up. The yield on TLT is negative and probably going to stay that way for a while. The share price may go up, but probably not a lot. If we get some decrease in the Fed funds rate, we may or may not get much of a decrease in the 20-year treasury rate. That's an unknown. So essentially, if you own TLT, your only real upside here is a massive drop in the 20-year treasury. Does that seem likely to you? I say no. And the reason for that is our society is swimming in debt. Nearly $100 trillion of total debt in our society. It's crazy. And the government is going to print more and more money going forward as we continue to run deficits, meaning that we're going to have more and more debt that needs to be sold. They need to finance those deficits, $2 trillion or so a year. So that means the supply of treasuries is going to grow. At some point, will investors push back and say, hey, I'm not going to buy treasury debt. I'm not going to buy a 20-year treasury at these low yields. You need to pay me 7, 8, 10%. I think that day could come. Now, how far off? Who knows? But when it comes, that means TLT is going to nosedive. Anyways, it just doesn't seem like a very good investment to me. And all you're doing if you own TLT is gambling on interest rate movements. I guess you could make the argument that there is some protection against the tail event. If we do get a depression and long-term rates were to come down precipitously, then TLT could have a very large rise in price. That would be the one scenario where TLT would be a big winner if we just have a wipeout depression and interest rates for the 20-year were to go way down again, like down to 1 or 2%, then you would see a big gain on the share position. But outside of that tail event, I think TLT is a poor investment. I hope you enjoyed this video. I hope it gets you thinking, helps you better analyze your investments, and overall improve your family's financial plan.